Let's first address an issue or a news update that has come by in the mutual fund industry. Let's welcome Harshvardhan Roongta of Roongta Securities to talk about the recent Sebi's directive to AMCs instructing them to stop inflows into overseas ETFs. Harshvardhan, good afternoon. Thank you so much for joining us. Well, if you can simply make the viewers understand what has happened here and why did Sebi instruct AMCs to do this? Did they hit the $1 billion limit already?
Yes, Sonal. Sonal, what this issue about investing overseas has been going on since February 2022. I mean, if you see the first time when RBI restricted mutual funds from investing into international securities, into direct stocks or funds of international schemes, it was primarily because the AMCs have a total limit of approximately 7 billion, where all AMCs put together can invest overseas. Now that limit was kind of breached at that point in time, and that is why RBI came down asking Sebi to ensure that the funds do not invest overseas. Now currently the situation has been that there is, in addition to the 7 billion limit that is there to invest in direct stocks overseas, there is a separate limit of $1 billion, which is to invest into ETFs, international ETFs. Now, the fund houses seem to have come to a point where they've also reached the limit of 1 billion, and that is why RBI through Sebi has been instructing the fund houses not to accept any fresh application in the form of lump sums as well as SIPs. So existing SIPs that investors may be doing into the ETFs would also need to be paused.
Okay, what happens to non-ETF overseas securities? That would continue taking lump sum or SIPs?
No. So there are two elements to this. There is one limit, an overall limit of 7 billion, which the fund houses can invest into international funds, as well as buy stocks directly. Now that limit was breached in February 2022, which now has opened up again due to redemptions. So there were redemptions, the markets crashed over internationally, so the values came down much below 7 billion, and now it's at about probably about $6 billion or so. So there is headroom over there to make further investments. Now, in addition to the 7 billion limit, there is a $1 billion limit for ETFs. Now, the ETF limit wasn't breached back in Feb 2022, so that continued accepting investments, whereas the schemes that are investing in international stocks directly stopped the investments. Now that $1 billion ETF limit seems to have come to its limit, and that is why the fresh investments into an ETF, into a scheme which invests into international ETFs, is going to be paused and no fresh lump sums are going to be accepted. Whereas going back to February 2022, the 7 billion limit that was there has now opened up a little bit. So that continues to accept applications, but not the ETF, the 1 billion ETF. I hope, Sonal, I have been able to clarify this and not confuse you further.
Some articles suggesting that the non-ETF part would still continue and it is way more different than what the current regulations suggest. So I just wanted some clarification on that. Just to give a sense of the AMC, how many funds do you think or how many schemes do you think would be into this ETF or would be having exposure like this, and which is the biggest one here?
So, well, Sonal, I mean, when you look at these schemes that were investing into only ETFs, I mean, you would have anywhere close to 60 to 70 schemes that are investing overseas in all. Okay, all in all put together, international funds that are there would be about 60 to 70. And this number is broken down into the two segments that we're talking about. One, which invests directly into international stocks, which is the 7 billion limit, which is currently open and you can still invest. Whereas these number of schemes that are investing into the ETFs with a 1 billion limit is going to be separate. So right now, we see all the ETF-oriented schemes not accepting any further investments, but the schemes that are investing into international stocks or funds directly still continue to be open for fresh investments, considering that the market valuations have come down, there has been redemptions, etc.
Okay. What does it mean for investors who are investing in ETF in that case? Should they worry? That's the entire point. They are worried. What happens now? So it's nothing to worry, right?
Absolutely. So there are, see again, so all those who have already invested into the scheme, they are not required to redeem, they are not required to do anything, and that investment stays as it is, and it continues to grow the way it is going to grow. Now, if you are an investor who's doing an SIP into a scheme, into an ETF-based scheme, Now that SIP is going to get paused. It's not going to get cancelled. It means that henceforth from 1st April onwards, you will not have any fresh SIPs going into the same investments that you're doing. Whatever you've done till now remains there. If you are an investor looking to put a lump sum amount after 1st April, you're not going to be allowed to do that. However, all the investments that you've done earlier continue to remain as it is. So there's nothing to worry in that sense. There's nothing going wrong with your investments. It's not that there is a market crisis because of which there is a limit to put onto the investments. It is simply that there is a limit RBI sets for how much investments can be made internationally, and that limit has come to its total. It's exhausted, and as a result, RBI said fresh investments are not going to be allowed. Does not mean that there are some crises or there's some scam or there is some crash expected. Nothing of that sort. It's just that the limit has been exhausted. Hence, fresh investments will be stopped.
And that is exactly what any investor would have liked to hear. Last question before we let you go, Harshvardhan. You know, there were 3 new ETF FOFs in US Treasury bond as well, which were recently announced. It's been a year, and it's just been a year. So what is the take here? If somebody is invested here, they should continue to invest.
Yes, of course. I mean, so as I said, all the investments that you've made are already invested. There's nothing, no implication of that. You're not going to be asked to redeem. You're not going to be asked to do anything with that. So that remains as it is. Only fresh investments are going to be impacted. Now, what also you need to be understand is that if you're investing into international gilt, you would redeem or stay invested depending on your outlook of the interest rates in the US. You're not going to be worried about the fresh flows that are going into from India into those securities so I don't think there is anything to worry for existing investor. Very clearly re-emphasizing again, there is nothing, there's no crisis kind of a situation due to which this kind of action has been taken. It was already in place. The limits have been prescribed much long, very, very long ago. It's not a fresh limit that has been given to the mutual fund industry. Just the popularity of investing overseas had gained so much of momentum that people would prefer investing and allocating certain portion of their portfolio to international ETFs and securities. As a result, you saw that limit being breached, and hence there is a restriction on putting fresh money. So just repeating, nothing to worry for existing investors. Fresh investments, of course, will be paused. So in case you still want to invest overseas, there is a small window open in the $7 billion category. So there is some room for making further investments. But the ETFs are going to be stopped from 1st April.
Okay, thank you so much, Harshvardhan, for joining us today and clarifying that. So the moot point is that there's nothing to worry. It's just a pause that has come by, and that is not something that will impact your existing investments. We'll do